Okay, this is going to be a very, very special video because I've actually been forced to show you the perspective of how I'm seeing things ahead of time, right? So I need you to just pay very close attention as I am going to practice something that I don't usually like to practice, and that's called fractal analysis. Okay, so I'm going to do this just for the GTII community, and we're going to see how it goes. But let's go ahead and start. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTII technicals, raw price action, statistical, and fractal threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's begin. Okay, so GTII made its leg down today. I was expecting maybe something around 159, but we actually made that 140, suggesting that we are in the process of validating the newly converted resistance into support of this descending triangle, which is, by the way, one of the only formations that I really like to call. And I am sorry I'm using that word, but what I mean is call by call out, meaning that it's a formation that's both mathematically backed and psychologically backed, opposed to literally any other formation in the markets. None of them have mathematical properties to it. This one does. Okay, so for example, the top side of 298 that we faced, we can actually take a trend line from the hypotenuse of the triangle to the very lowest point of the triangle from the area of breakout, and we can apply it to that area of breakout, and it shows us the price objective. As you can see right here, the price objective was absolutely absolutely that high that we were facing, right? 298. Very interesting things with formations like these. Okay, what I want to point out first is that the 3-day statistical side of the analysis, this is where we were, talking about that massive move to the upside to about 18 bucks. If you look at the momentum versus volatility profile, you can see that it's showing just a little bit of weakness, but it's still pivoted towards the upside, suggesting that the move is still on. So I was actually compelled to run another backtest, another statistical backtest. So let's go ahead and move on to that. So I actually moved up the time frame and went into the 5-day time frame, and I noticed that there was another set of data which was actually a little closer to the price action that we faced just recently. So in this case, there are a total, this is regarding volatility versus momentum. This is volatility represented by BBWP. Sorry, I need to make sure that there's context behind this, right? Volatility is direction neutral, okay? So only because it's downside doesn't mean that the price is going down. So in order for us to get that bias for direction, we pair it with momentum. And this, and momentum represented by stochastic momentum, which is a indicator proprietary to TradingView software. Okay, so in this case, you can see that momentum versus volatility are, volatility in the contraction phase, while momentum still favoring that upside. Very, very, very good stuff. And it's still suggesting the upside even though we face the downside that we have. Okay, first of all, we do have 4 days and 18 hours to finish this last 5-day iteration, the candle, but the upside is still happening. Now, out of the entire backtest regarding volatility versus momentum, we're looking at a total 9 iterations, of which 8 were guessed correctly to the upside. It's almost perfect. So this is an averaged upside accuracy of 88.89% with an averaged upside thrust of 183.05% with an average duration of 25 3/4 days. This is proof of work down here. Okay, so now let's go ahead and just zoom in to the price action and just take a look at what has done based on the statistical mean, right? The upside. So upon the firing of the signal, which is usually when both momentum are pivoted towards the upside and volatility are starting the contraction phase, we started it right on this candle here. The opening of this candle to the high that we faced of 298 is a move that was completed of 160.13% to the upside of the 183.05. In all its fairness, it's already fair to say that move has been completed. However, the upside is still suggested, and we're still in a contraction phase. suggesting that adding an additional 20% from the missing 183 or an additional 23 would essentially put us to, let's see, actually let me make a quick adjustment here because it should be 23%. So it would essentially put us at about $3 and about 74 cents, which is confluent with a lot of targets. In fact, it's confluent very much with this high right over here. So you can see it's 369 when you look at it, when we hover over it, right? So very confluent with this target right here, okay? So let's go ahead and start talking about the fractal side of this analysis. Before we move on to that, okay, I want to just point out that the more time frames that we're starting to get retracing or within this volatility, the volatility expansive, the critical volatility expansive zone, which I consider to be anything within the 90 percentile, the better the movement for the asset. Please remember that the natural ebb and flow of the markets is always going to be up and down, okay? So the larger the upside, the bigger the percentage. I'm talking about this in particular. The bigger the upside that we're looking at, the larger the swings are going to be, okay? So this is where we really have to kind of buckle down and really expect a rough ride. Okay? So let's go ahead and now reference the time fractals. Okay, so remember real quick, I'm talking about $3.74 potentially, right? With the, in respects to the 183.05% to the upside, based on the firing of the signal of the 5-day, which is still happening. Even if we got this downside, it's still in play. Okay, so let's go ahead and start referencing the time fractals. Okay, so I want you to notice real quick that we have a time fractal. This is what I'm trying to do. I'm trying to time the amount of times we've hit the low versus the amount of times that we've hit the highs, right? So what we're facing right now is a structure, and it's actually a pretty bullish structure. It's a series of higher highs and higher lows, right? So the space between this high iteration to this high, the space between this low to this higher low, right? So that all that, it matters greatly, right? It matters. So let me just go ahead and let me just go ahead and adjust this to, oh, it is there. Okay, good. All right. So this is insinuating that we're in an ascending channel. Okay, this is a bearish formation, but it doesn't always, materialize to the downside. It's remember, it's just a formation that we're looking at here. I'm just giving you a trend of what could be happening. Okay, so if we were to consider that we're going to come back down to touch our support from the channel, then let's go ahead and take a look at that target. It's about $1.02, right? So about $1.02 rhymes with what? Well, let's go back and take a look at this triangle here. Take a look at this. We're right at the support of this right angle triangle, suggesting $1.02. So meaning that we are on our way to validate the newly converted resistance into support, which, by the way, I have mentioned before. I think I've mentioned actually a few times that we never actually came back to validate this newly converted resistance into support. So now it looks like we're on our way to that, and it's having deep correlation with our ascending channel. So if we're talking about time fractal here, then we would essentially expect the downside to be, oh my God, you guys, this is super important. This is very, very speculative. I need you to know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot, and I repeat, I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence so that everything can end up okay. All right, you guys, I'm here to help, but I want to make sure that you guys are, I want to make sure that I'm abundantly clear with when I say that, right? So we know that CPI data is coming out on the 14th, and we're in a bullish stance. We're feeling pretty good. Even the Fed has already warned us that they are going to maintain like a hawkish whatever, but for some reason, all of the numbers are falling in place nicely, and the markets have been pricing that upside in continuously. What I'm saying here is very important, okay? So this is next. Please listen carefully. If we're following a time fractal, this is insinuating that we're going to find the bottom on the day of CPI, on Tuesday the 14th. And where is that target landing? That target is landing at $1.02 on the 14th of the CPI data release. And this is also why I'm saying that guys, I don't know what the CPI is going to be. But if we're following fractal and if we're following market trend, then this is essentially insinuating that we actually may get a good CPI read, and that would actually pressure the markets to the upside from the bottom that we're finding here. So now, continuing the time fractal from this high to this high, the target ends up. The target ends up. I just want to go ahead and adjust this just a little bit so that we can, because it was to the 374 target, right? So let's just say that it was right around here, right? The 374 target. That's already at the top of the. That's already at the top of this channel. The 374 target, meaning the 183.05% that it needs to complete upon the firing of this signal here on January 25th. Okay, I want to show this is I don't practice fractal analysis and this type of stuff because it presents an enormous amount of hopium and it actually suggests things that may or may not be true. So what I'm saying here with this stupid ass fractal is that apparently CPI is going to be good and we're going to rally the markets, and GTII is also going to rally to $4 and something in a matter of days or whatever. So let's just speculate on that now. So essentially we get a good CPI read for some reason, right? And then this thing makes its ascent to the next upside move. This would essentially put us on February 28th at about $3.74. And then we would face another cycle and then continue on to the upside. If we were to follow the cycles the way we're looking at them right now, let's go ahead and just apply. Let's just go ahead and apply the next time fractal to the top, right? So what I haven't done is actually taken into account the next. It's just, remember, guys, time kind of dilates as it starts to move up. It's different. Okay, for example, here. This is the exact same copy put right over here, but for some reason this is 37 days and this one is 25. So now if I take the copy of this one, which I already did, and put it right at the beginning of it, it would suggest that actually the upside would be met by not February 28th. It would actually be met by February, this is February 28th, right? My apologies. So applying this fractal here, it would actually suggest that the top side of about $6.20 right around there would be on on March 22nd, and this target actually has a lot of rhyming. Please look at that blue arrow to the left there. You see that top wick? It actually takes us right to that top wick right here. So that's I really feel uncomfortable sharing things like this, okay? But the reason why I do this is because in my head I'm kind of already doing this without showing anyone, and I don't want to show anyone. The reason why I'm not favoring this is very important. The reason why I'm not favoring this to the top is because the upside move of 374 is insinuating that we're not going to touch the top of the trend line here. It's going to be it would be essentially a bull trap. And why would that be important? And why would we face another upside? If you watch my videos often, you'll know that I talk about the golden rule of three. Okay, test number 1, 2, and 3, but it's not happening, would essentially take us capitulating, failing this channel. So meaning that it would still fake out here, not give us that 3. We come back and test the support and then make a test to find out what could happen for that test number 3, if we're gonna realize it or not. Like I said, this doesn't always have to end up in the downside, but I just want to make it very clear that this is something that could be happening, okay? And I don't like to practice this type of analysis because it presents hopium, and I like to just base myself around the facts, around things that are happening now. some more downside to be expected, the 8-hour and also on the daily. Now, if we're referencing the buy daily, it looks like that downside is coming to an end. So it's literally almost there, but it's the buy daily. Okay, so this still has some time to go, meaning that it's very confluent with facing this downside here before a bounce to the upside. Aside from the fact that it's already following that higher low, higher high structure. Okay, you guys, I'm going to end the video here because this is already getting me super nervous. I didn't realize how nervous I was going to get by talking about this. Okay, and also DBSI, the ARC-Series indicators, which by the way are available to you, did fire. Like I said, it did fire this the bear signal, sorry, at the opening of this candle at $2.14, which was when? Yeah, I think it was yesterday. So, yes, it was yesterday. Wow. So, if you are interested in acquiring these indicators, just definitely reach out to me via DM, and we'll go over those subscription packages, guys. But with that said, I really got to end it here. I'm like losing my words. Please, that whole good stuff, like and share, whatever. And I will catch you at the bell mañana. Adios.